Hey, what's going on, everyone? Vega here for SerpentX Tech, just getting set up, configured for you all. Welcome back to another episode of Caffeine and Crypto. Basically, it's an episode where we go over some news, some crypto news, and I welcome you to join me with your favorite caffeinated beverage of choice. Coffee, NOS, Monster, whatever energy drink you fucking like. So yeah, markets took a little bit of a hit this week, unfortunately. A little aggressive action from the SEC. And just for my live viewers, or for my later viewers, basically, just in case of recap for you, okay? My name is Vega, SerpentX Tech, weekly show every Saturday at 11 a.m. Eastern Time, where we go over crypto news, maybe a little bit of mining hardware, tech hardware, because you know I love tech, obviously, as you can tell. I may engage with the live viewers, but we're going to focus on some news stories. So hang in there. And if any of my live viewers want to help me out, start helping me out with some timestamps, that'd be greatly appreciated in the comments of this video. But yeah, markets took a bit of a hit. SEC took some aggressive action, started scaring everybody. Everybody started running with their tail between their legs, and then the markets tumbled. But what's odd to me is I posted this bottom line right here around the 21.4 a while ago because of this section. And it looks like we bounced like off of it perfectly. So, you know, this is kind of like a good range to put in a short time range long, not financial advice. And then, start shorting it around 23.7 if you really are into that. But we got a couple of key indicators flashing, right? A lot of people have been talking lately about the weekly def cross, but then on the daily it was a golden cross. So we had a golden cross, but then the SEC did what they did, scared everybody, so the golden cross meant nothing. Well, it did the opposite of what everybody was thinking it was going to do with the golden cross. The weekly, it wasn't touching yet. But with the actions from the SEC, it definitely is going to cross. So we might pull back a little bit more. But if we pull back a little bit more, I suspect to just make it to the low 20s, high 19s, and then we'll come back up. But I did do a post 4 days ago. I'll just talk about the Bitcoin def cross and the weekly timings, but a golden cross and the daily timings. That has never happened in BTC ever, which is true. We never had a golden and a def on two different time scales. What do you think will happen? Are we due for the crypto market dump or pullback, or will the bulls continue the recent upward trend? A lot of people, 35% out of 159 votes, which is actually pretty good. That's a lot of votes. Thank you for everybody who participated. We are going down bearish, 35%. 21% says up baby to the moon, bullish. 21% says no idea really, and another 21% says Bitcoin be like whatever, I do what I want. So and then 3%, ¿cómo? ¿Qué es cripto? As in, they don't know what crypto is. So, thank you for the people that voted for that. A little bit of Spanish there for me. But yeah, there's a lot of 21% here that is like bullish, not really, they don't really know, and they understand that Bitcoin does whatever it wants. So Bitcoin does tend to do whatever it wants. Now, the crypto market did pull back, but it wasn't the only thing, right? We had the S&P and traditional stocks also pulling back. Very interestingly, it's almost like this was timed or something. Moving on, this particular episode of Caffeine and Crypto, this weekly episode of Caffeine and Crypto on February 11th, 2023, is brought to you by mindtheasic.com. Please make sure to go check them out. I will have a link in the description soon if I haven't had one in there already. It is like ASIC miner value, but there is some pretty neat resources on here to help not only the mid-scale to large-scale farms, keep an eye on things, but also these small miners, right? Because the small miners don't have tens of thousands of dollars to blow on ASIC, so they might be getting, like an iPolo G1 or some of the other miners that are very small, like a Sidecoin 366 Gold Shell SC box. It's making 20 cents a day, stuff like that. You can look at your payback time and obviously your efficiency. And if I move out of your way in the upper right hand corner, there is a kilowatt section, right? So if we're looking at 30 cents per kilowatt hour, which is some of my European family over there, you can see the profit per day and the efficiency. If we drop that down, obviously the profit per day goes up according to your location or electricity rate. So check out Mind the ASIC. I have a link down in the description. Sponsor of today's Caffeine and Crypto. Moving on. Looks like, yeah, Bitcoin and Ether tumble as regulatory storm clouds gather. Of course, I do not pay for Barron to provide me whatever crap they want to provide me, but needless to say, it's exactly true. Now, you might have a subscription to them. I don't. You're going to see this everywhere. And there's a couple of things that we're going to talk about in today's video. For example, what does Kraken SEC settlement mean for crypto staking? Now, I posted a video about Kraken getting sued or fined by the SEC. I can't post the link. I'm running out of words in my description. I need to cut it back. Let's see here. Let's cut something out real quick. Sorry, guys. Bear with me. You know, Kraken, I liked, but I moved all my funds off of there a long time ago. I love how 7 people showed up and immediately left. So what does Kraken SEC settlement mean for crypto staking? There are a number of bankruptcy hearings this week, but the big news was Kraken settling charges with the U.S. SEC and ending its U.S. crypto staking program as a result, right? Because they did not register with the SEC. They didn't register their staking program with the SEC. So the SEC announced charges against the crypto exchange Thursday, alleging that it's offering crypto staking as a service program. So staking as a service, SaaS, right? SaaS, which is not the same technical term or IT term that we're used to, amounted to offering unregistered security products to the U.S. To settle the charges, Kraken paid $30 million and is shutting down all its staking services. So if you were earning Polkadot or any other currency, because I was using it for Polkadot. Remember Polkadot kept on flipping the script? And let me bring you guys in just to explain this a little bit better. So I was staking with my ledger Polkadot, but every time I turn around, Polkadot would raise the amount you needed in order to stake, right? And obviously you choose 16 validators, but those 16 may not be selected at that time, right? So every few days or something like that, maybe one of my validators that I selected with a low commission charge would be selected, so then I'm earning staking. But because they kept raising it, you know, you had to have 40 Polkadot, you had to have 60, you had to have 80, you had to have 100, 120. I got pissed, so I moved it to Kraken. I was earning more interest or APY or Polkadot with Kraken, but you never want to leave your crypto on exchange long term. So I moved it away and moved it back. And Kraken is taking away its staking services. And this is a problem because a lot of people turn, for example, to other exchanges to earn additional APY or interest on their crypto. They just want to stack them sats. They just want to get more. If they're going to hold the crypto anyways, right? They just want to earn more of that crypto by whatever they need to do, whether it's holding on an exchange, a centralized exchange, which is a huge risk, or whatever they want to do. But you can stake through the ledger certain projects. So you can still keep your funds securely under your control in a wallet and to be just fine. Now, there are other hardware wallets that, you know, might, as long as the service or whatever crypto program you're using has Wallet Connect that you can use, but it really just depends. You have to really hunt depending upon the cryptocurrency that you're really looking for. So bear with me 1 second. Got something in my throat there. So let me say good morning real quick and we'll continue on. Paul D, how you doing? Gandalf Gray, Village BC, Retro Mike, Crypto. I already said Gandalf the Gray. That one guy, Oz, Crypto Kel, thank you for coming over. Magic Lucky, Integra Guy, Automatic Beats, and Gandalf, thank you for being a member. Good morning from Seattle, USA. Good morning, bud. Do you think they will go after the node service? So the Ethereum nodes, yes, I think they will. There's going to have to be something that's, I don't know, this is going to be rough. This is going to be rough. There needs to be proper education. I don't think they're properly educated. Plus, Gary Gensler's a little bit two-faced for me. You know, all that side dealing he was doing and then turns around. It's like We wanted you to focus on protecting the consumers from people that like SBF and FTX, and instead you just keep on going after targets that nobody asked you to do. But whatever. Anyways, the action raised a number of questions about what it means for staking at large in the US. Before we get further into this, it's worth defining some terms we know about proof of stake. Staking has gotten an increased amount of attention in recent years, especially in 2022, after Ethereum, the world's second most valuable cryptocurrency network, transitioned from proof of work to proof of stake. Companies offer staking services in the US because operating your own node just isn't as easy as letting someone else do it for you. I'm not judging. I know a lot of people that operate their own node, but okay. Brian Armstrong, CEO of Coinbase, raised the alarm Wednesday when he tweeted that the rumors that SEC was targeting retail staking at large. And I do have an article that we're going to go over about the possible ban on staking crypto. Looks like SEC Chair Gary Gensler's own past remarks to set a bit of a baseline here. In September, he said staking could meet the parameters of the Howey test. He highlighted intermediaries in a review with Wall Street, saying staking through intermediary looks very similar with some changes of labeling to lending. Some of the biggest questions bouncing around the Kraken announcement include whether the SEC is going after all staking in the US, how crypto companies can actually offer staking services, and whether the SEC would offer any guidance on the companies hoping to offer services without drawing agencies' ire. Because that's the thing, right? How are they supposed to know they're doing something wrong if you don't have clear guidelines, right? Here's the line in the sand. Don't cross the line in the sand. Okay, cool. I won't do that. I can do everything else, just don't cross the line in the sand. But you don't say that. So I'm doing stuff, right? I don't know if it's going to get me in trouble, and all of a sudden you hit me with a fine, you sue me, you fine me, whatever. Like, you got to come up with clear guidelines. It's stupid. An SEC official speaking with the media briefing after the settlement announcement told a reporter that the agency basically looks at the offering of staking service as being similar to offering any type of security. So they got to register their staking as a service program if they're an exchange in the US with the SEC. They have to register it. If they don't, they're probably going to stop providing staking. We're seeing a number of companies turn down or take off staking from their hosting services. Son of a biscuit. My allergies going off the chart right now. An offering like staking service at issue here raises a whole host of complicated questions, including whether the staking program as a whole would be registered or whether each token staking program would be separately registered, and what the account implications would be for Kraken. Another component of the lawsuit the SEC filed against Kraken noted that the company determined that the staking rewards would be for users. The exchange was not just sending the actual protocol rewards to Kraken's investors. All right. So we know about Kraken. What investors should know about staking, the passive income, and all these articles are in the description as usual. Passive income opportunities at the center of the crypto latest regulation scare. We know about the fine, blah, blah, blah. Do you give us anything new? They should put everyone on notice in this marketplace. SEC, this should, says SEC chair, talking to Squawk Box. Whether you call it lend, earn, yield, whether you offer an annual percentage yield, that doesn't matter. If someone is taking customer tokens and transferring it to their platform, the platform controls it. No shit, that's what a centralized exchange does. Staking has widely been seen, blah, 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 yada, yada. We know about staking. We know about how it works. Staking as a service. Here's where it gets a little murky with the SEC. On Thursday, the security regulator, Kraken, failed to register the offer and sale of crypto assets, blah, blah, blah. Where does it get murky? We already know about this. Red flag: if someone makes an investment with a reasonable expectation of profits that would be derived from the work or effort of others. Coinbase has about 15% of the market share of Ethereum assets, according to Oppenheimer. The industry current retail staking participation is 13.7% and growing. Another one too. Staking works only for proof of stake networks like Ethereum, Solana, Polkadot, And Cardano proof of work network like Bitcoin uses a different process to confirm transactions. So I guess they're trying to make Bitcoiners feel better. There's a lot of staking going on, right? ADA Lite for Cardano or various platforms. You can keep it on your hardware wallet. And I don't see how the SEC is going to do that. But I think it's going to be more or less centralized exchanges, centralized companies that are taking people's funds are going to have to register if they want to do yield farming, or they want to do staking or annual percentage rate per year bullshit. They're going to need to register their staking service. Now, here's the Ethereum aspect. Let's see here. We heard about Kraken, fine. We heard about Ben Armstrong warned that the SEC would get rid of crypto staking in the U.S. for all retail customers. And what's funny about that is more than likely retail customers are in staking. All right, people who are in crypto are probably in staking, and it's probably just a little guy, right? The average individual, you or I, that are in staking, and they're taking it away. So something that could have earned me more crypto and possibly more fiat in the future, you're taking it away. So it was helping me, but you're taking it away. I guess they really don't want us to have any money. Let's see here. Sign to market thinks centralized exchanges, staking intermediaries like Kraken, Coinbase should worry, but not the rest of the industry. In the past, Coinbase wrap stake ETH, CB ETH, selling volume has outpaced buying at a ratio of almost 3-to-1, according to Gecko Terminal. Now, CB ETH, or Coinbase wrapped stake ETH, is the token I was telling you guys that if you want to unstake your Ethereum 2.0 on Coinbase, you could do that. You would get the CB ETH token instead, and then you could sell that to fiat or to whatever currency, Bitcoin, whatever you want. And apparently, its selling volume is outpacing buying at a ratio of almost 3-to-1. So not a lot of people are buying it, definitely selling it. Stake assets on Ethereum. Keep running, blah, blah, blah. Hey, man, I can't talk. Staked assets on proof-of-stake networks like Ethereum help keep networks running. They are how validators use hardware stores data and process new transactions. Prove they have skin in the game. Validators receive rewards for participating in networks, but can also lose some of their stake assets for inactivity or other offenses. Becoming a standalone validator for Ethereum, which is now the largest proof-of-stake network, isn't easy for most retail-level investors, and you can run your own node. It can be a validator with 32 ETH, but you can run an Ethereum node if you want to participate. And I talked about doing that. I just haven't had time. A user would need 32 ETH worth for roughly 48,000, blah, 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 yada, yada. Can you get to the point? There's share validator rewards for the deposited ETH, yada, yada, yada. As a category, 65 liquid staking protocol tracked by DeFi Llama accounted for. Okay, where's the part that you were talking about? Where's the problem for Ethereum? You just go on to say the same shit. What are you doing? Okay, long story short, it's just the companies that need to be worried. The companies and the centralized exchanges that offer staking service or staking as a service should be worried. As far as the individual, the validators, the small scale, not centralized entities, I don't think need to be worried. So Paul D says Brian will stop doing ETH staking if censored. All our ETH blocks are censored. That's sort of Brian Armstrong. I don't trust him very much. The SEC is terrible though. So it's like the lesser of two evils there, Paul. Okay. My Discord DMs, Max. I gotta open up Discord. It's probably gonna pop up on my left in front of you guys. Yep. Oh, yeah. Yeah, we got a mutiny going on. Today, the SEC shut down Kraken staking program and counted it as a win for investors. I disagree and therefore dissent, said Commissioner Hester Pierce. Nice. So Hester Pierce has publicly rebuked her own agency over the shutdown of crypto exchange Kraken crypto staking program in the United States. The commissioner blasted her agency on February 9th statements titled Cracking Down, arguing the regulation by enforcement is not an efficient or fair way of regulating. Ladies and gentlemen, let's round of applause for Miss Hester Pierce. Pierce's statement also slammed the regulator for shutting down a program that has served people well. I want a bunch of what do you guys do in chat if you're trying to like applause? What's the thing? Is there a letter, a number? Do a bunch of that, whatever it is. I don't know what it is. Anyways. Today, the SEC shut down Kraken staking program and counted for a win, blah, blah, blah. She disagreed, yada, yada. We got that. She also says using enforcement actions to tell people what the law is in an emerging industry, which is still an emerging industry, right? It's new. We're learning together. It's not an efficient or fair way of regulating. Moreover, staking services are not uniform. So one-off enforcement actions and cookie-cutter analysts does not cut it, she wrote. Pierce implied the regulator was lazy and paternalistic. What the hell is that? Hang on. Big words on me. Big words. What does this mean? Relating to or characterized by the restriction of the freedom and responsibilities of subordinates and dependents and their supposed interests. Okay. Going on to say public process to develop a workable registration process that provided valuable information to investors. See, you don't define the line in the sand, and then you punish a child for crossing the line in the sand without telling them there was a line in the sand. You got to come up with clear guidance, clear rules. Hey guys, we're going to start looking at this. This is borderline illegal. We're going to need you to revamp your system, fix it up. This is the guidance that I'm going to give you. Here's your paperwork, about 900 pages. Good luck. Hire a team, and we'll come check back with you in a couple years, all right? But no. Dickheads. Early this week, Armstrong, blah, blah, blah. Rumors of the SEC. We don't care. Armstrong. We already know about that. Kraken said in February 9 blog post that it would still offer staking services to non-U.S. customers through a subsidiary, but according to the SEC announcement, the firm permanently banned from providing staking services to U.S. residents, even if they sought to register with the regulator. What? So it will never be able to come back. Kraken staking will never be able to come back. Guys, this is shady, bro. Pierce has obviously previously proposed a safe harbor for token projects. Okay, hang on. Pierce, also known as the SEC's crypto mom, has been a strong advocate for the crypto industry during her time as the regulator. Pierce has previously proposed a safe harbor for token projects which are looking to build decentralized networks, in which the network developers would receive a 3-year grace period where they were exempt from SEC legal action. She released an updated version of her proposal April 13th, 2021. Where's that proposal, man? We need that right now. We need that. So, hang on. I'm going to go to Coinbase right now. And I want to see if I'm still earning my little pennies. Thank you, Max. I want to see if I'm still earning, right? Earn. So they haven't turned off their Coinbase One rates yet. Right? So if you're a One rate customer or become a member, you can earn additional interest. But as you can see, I earned some Ethereum, Tezos, Cosmos, Algorand, Solana, Cardano, and some USDC. Not much. We're talking cents, maybe a couple dollars. But Coinbase Earn is still working. Yeah, right? Sunflower Mama's going to have to challenge Crypto Mama or Harris Pierce for that title. Definitely. Very interesting. Right? So we got a situation here where the SEC, Gary Gensler, and obviously a few in his cabinet or supporters or whatever, taking a strong stance on crypto, which is odd to me, right? So SBF, FTX, all that shit happens. And instead of worrying about, hey, we need to make sure that exchanges aren't heavily invested in their own token, right? Like a majority of their proof of reserves isn't in their own token that they create out of thin air, that they can manipulate the price up or down, that these exchanges aren't heavily invested in their own tokens, so that way if those prices of those tokens crash, they won't be crashing the other prices, right? Because they usually would sell Bitcoin, Ethereum, and other top tokens to make up for the loss in their own token, right? And then they over leveraged themselves. They placed bets. They bought a new stadium. They bought this, a new boat, a new house, and then now they're losing money because the token takes a dump, and they're having to liquidate. Instead of focusing on that, they went after Kraken because its staking service wasn't registered. Were they warned that they need to register it? Were they told, hey, here are the clear guidelines. Come register quick. You got 1 year. Time's ticking. No. So I just find it's like a, not an illusion. What do you call it? Sleight of hand, right? Everybody look at this. Look at this. I'm stealing this real quick. I hate that shit, man. I really do. So anyways, we all know about Brian Armstrong and his thoughts on the situation. Obviously, he's going to be publicly lashing out against the SEC and its actions because of what happened. But it's good to see that there is not a mutiny, but people within the SEC that doesn't agree with the actions taken by Gary Gensler. I think Gary Gensler is just a snake. I really do think he's just a jerk that will meet you in the back room, and if you got the money to make some really great deals, he'll hook you up. But if you don't got the money, he'll he won't work with you. Like, did FTX have beef with Kraken? Like, that's a legit question for me. Did FTX or SBF have beef with Kraken? Because that kind of feels like, any of SBF's enemies or any of FTX enemies is, ever since that happened, has been like under a microscope, looking for something to go after them for. That's my feeling. I could be completely wrong. Wow, Max is going to the U.S. Space and Rocket Center. That's awesome. Have a great day, bud. So PayPal, right, through Venmo and stuff like that, is pausing stable coin work amid regulatory scrutiny. So this is what I was talking about. A number of other entities are pulling out of the staking game or the stablecoin game. You're scaring everybody, guys. Stop scaring everybody. As you can see here, I could buy crypto, and I think they were trying to add much, much more. I could buy crypto through Venmo. Obviously, I don't think I could withdraw it, right? If I choose Bitcoin, all I can do is buy or sell. I can't actually send it. But this is going to cause, until there's some clarity, is going to stop all that new money from coming in. And that new money would be very helpful right now to help prop up the network. Dang it, man, my allergy. So PayPal pauses stablecoin work amid regulatory scrutiny. And its key partner in the product faces a probe by the New York State Department of Financial Services. PayPal has hoped to debut the stablecoin. It's the stablecoin? Wait. hope to debut the stablecoin, which will be backed by 1-for-1 for the dollar in the coming weeks, Bloomberg reported, citing a person with a knowledge of the matter. We're exploring a stablecoin. So they're making their own stablecoin. I have missed that. And what? We're exploring a stablecoin. If and when we seek to move forward, we will, of course, work closely with the relevant regulators, a spokesperson for the payment firm said. The cryptocurrency market is going through turbulent, blah, 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 yada, yada. We know about that. Okay, so PayPal is coming out with its own stablecoin. What do you guys think about that? Let's do a quick poll. Let's see here. PayPal stablecoin. Would you buy or use? All right, quick poll in the live chat. Moving on, Kazakhstan law limiting crypto miners' consumption of electricity enters into force. Now, we heard about this, and I talked about this on a past Caffeine and Crypto, but the law is coming into force. It's actually going to be a lot harder. Now, the good thing for us is that some of the mining operations or mining entities over there in Kazakhstan probably are going to liquidate some of their resources or hardware, which means we should get an influx in supply over here in the States or various locations that are more friendly to mining. So there should be more hardware coming, possibly dropping the prices of miners down on the second-hand markets. The bad thing is we really want the ecosystem to be diverse, right? The China already banned it. Kazakhstan is limiting it. We don't want any restrictions. We still want to be smart and conscious of the environment and of our electricity use and how to really tap into renewable or greener sources of energy. But we want to keep the network decentralized for Bitcoin, Ethereum, all of it. And obviously Ethereum is not, but you know what I mean. You know what the point that I'm making. So a new law expanding the regulatory framework for crypto miners while restricting their access to low-cost electricity has entered into force in Kazakhstan. The legislation introduces a licensing regime for mining with two different categories of licenses that companies will have to renew periodically. So it's like your medical marijuana card. You got to renew it every once in a while. Probably going to be a lot of money. So on digital assets in the Republic of Kazakhstan, looks like the president signed it on Monday, has come into force. The main purpose of the new legislation approved together with the amendments to other legal acts like tax code is to regulate the activities related to the issuance and circulation of these assets, most notably mining. The changes are also aimed at creating conditions for development of the crypto industry and fair competition between market participants. Local media reported the digital. Sorry, I'm trying to do something here. Digital asset law, which was adopted by Parliament in late January, defines the power of state bodies that oversee the sector and introduce licensing for crypto miners and exchanges, replacing the current registration system. Mining licenses will be issued for a period of 3 years to two groups of applicants. Entities that own mining infrastructure, such as data centers, meeting certain standards in terms of equipment, location, and security, fall under the first category. The second is for those that own mining hardware but rent space in crypto farms and do not apply for energy quota directly. So if you're a person that has your equipment hosted, you would fall into the second category, where if you were the actual entity or the hosting company of people's mining equipment, you would fall into the first category. A separate set of requirements has been introduced for mining pools. They must have their hardware and software installed in Kazakhstan and comply with the country's information security rules and other applicable regulations. Furthermore, that's interesting. So if you're a mining pool, your hardware and software has to be installed in Kazakhstan. That's interesting. Furthermore, miners will be allowed to purchase electricity from the national grid only if there is a surplus and exclusively from the government. Oh, exclusively government controlled. However, price caps for energy will be removed and the trading will be carried out based on market participants. Cheap, subsidized power was one of the factors that attracted mining companies to Kazakhstan following China's crackdown on the industry in 2021. The authorities in Central Asian nation has blamed the growing electricity deficit on the influx of miners and taken steps to restrict consumption in the sector, including temporarily disconnecting registered facilities and shutting down illegal farms. Wow. All right, good luck to my miners in Kazakhstan. Really, honestly and truly. Magic Lucky says, kind of weird. Why wouldn't PayPal just use the USDC? I wonder. How many different stablecoins do we need? Just seems like the more transaction fees. That is 100% true. And Magic Lucky, what you're really seeing here is a situation where PayPal wants to come out with a stablecoin first because they understand and know that other countries are coming out with their own stablecoins, right? CBDCs or central bank digital currencies. So if PayPal comes to market first, they're hoping that they can partner with the banks and companies and countries so that way they use their token instead of making their own. Oh, hey, you don't have to build a whole new thing. Here, we'll give you this. And so the PayPal stablecoin becomes the number one stablecoin. Right now, the number one stablecoin is USDT, right? Tether. USDC is another popular choice, but there are so many options. You are correct. It's annoying. There's a lot of fees. Not all exchanges accept it, so you didn't have to swap it, and then you can do your transactions. It's really a pain, but it's he who comes in first, right? Whoever gets done first is going to be the one that markets themselves to central bank authorities to try to use their stablecoin as their bank's digital currency. So we'll see how that thing pans out. I don't want PayPal to have a stablecoin. They can sell crypto and buy crypto and all that stuff and let users using Venmo get involved. But as far as being a major entity in the crypto space, I do not want PayPal or Google or any of those guys in the space. Now, the developers and their smart, talented individuals that work with those companies are more than welcome to be in the space. But we don't want to let them have a dominant control of their space. Otherwise, it will be fractured. And what I mean by that is you're going to have to centralize crypto space, and then you're going to have to decentralize crypto space, which there already is kind of that. But what I'm talking about is like I would only participate in tokens that have no central authority, like Bitcoin, right? You can't go to an office and tell them to cease and desist. You can't shut it down, short of turning off the internet, which we would turn back on anyways. You really can't stop Bitcoin. Whereas Ethereum is kind of on shaky ground because it's very much censored, it's very centralized, and if the US government decided to go to XYZ hosting facility and say, hey, you know what, I want you to shut it down, don't allow this guy or that girl to come in and use the network, they would have to comply and shut it down. So, with PayPal, I don't want to give them too much control. Bankrupt crypto lender BlockFi takes 2/3 loss to settle Bitcoin miner Bitfarms debt. BlockFi. I don't think I have them. Do I have them? Yes, I do. So this is the one. This is the one that I warned people about before FTX to get their funds off. And luckily I was able to get my $20-something off of it. Not much, but never leave anything on a central exchange more than you're willing to lose, okay? But yeah, anyways, Bitfarms, BitF, agreed to settle its remaining $21 million of debt with the bankruptcy lender BlockFi for a single cash payment of $7.75 million. The miner has been working to reduce debt obligations since mid-2022, including selling significant portion of a mass Bitcoin holding. So of farm mining, we're going to have more miners, right? So Kazakhstan, new regulation and rules is probably going to force people to sell their mining hardware. And then we have this, which I believe has already been gobbled up by probably some of the more significant mining operations or players in the space, just FYI. In January, a Toronto-based company said it might default on its obligations to BlockFi, which were secured with only $5 million in assets. BlockFi, a major lender to miners, filed a Chapter 11 bankruptcy protection in November as reverberations, oh my god, I can't say it, from the implosion of crypto exchange FTX were felt throughout the industry, lowering our debt nearly 85% from a high of 165 million in June 2022 to 25 million today has significantly decreased principal and interest obligations, which boosts our cash flow and positions as well for the future. Bitfarms CEO Jeff Lucas said Thursday in a press release, leveraged miners have had a hard time paying off their lenders during the bear market, with some loans ending in collateralized seizures or contributing to the Chapter 11 bankruptcies. So, dominoes still fall. All right, so real quick, Paul D says stablecoin issuers get a hold of free money by buy treasury bills with and make 5% interest for not doing a whole lot. I'll take 5% APY on 1 billion if there are any takers. Stablecoin issuers get to hold free money to buy treasury bills with and make 5% interest for not doing a whole lot. You talking about like USDT and stuff, Paul? Hang on one second. I have an article somewhere. Hang on. 1 minute. I'm gonna have a video. I had a video scheduled about staking, and then this happened. So yeah, I wonder how this is gonna impact, right? So like wallets, hardware wallets or software wallets that you actually have control of your keys, how is this action from the SEC going to impact those is a good question. I can understand, again, centralized exchanges and entities doing or getting hit, but it shouldn't be like Exodus, Trust Wallet, Ledger. It shouldn't be impacting or have any effect on those crypto staking. What's a stable coin? Do they have a stable coin on here? Something I definitely need to continue researching in. This song got stuck in my head. Anybody know who Shinedown is in the chat? Anybody know who Shinedown is? They're a band that started out here in Jacksonville. Small band that became really good. And I immediately, when I heard this title of this article, sprung a song into my head. Anybody guess what that song was? I'm going to read the title to you. Are the remaining crypto giants staring down the barrel of the U.S. government's gun? What was the song from Shinedown that I am thinking of and have stuck in my head right now? Type it in the chat. All right, Gandalf Gray, what do you think about Flux saying they don't want the regular person running Titan nodes and only permitting large data center to do so? I think we talked about this before, Gandalf, in the last one. In the last video, we talked about this. In the country that I live in, you shouldn't be told what you should do and shouldn't do. So, with that mindset, I don't agree with it. But I think there was something that we talked about where I did agree with, like, the average retail investor or user only participating in the Cumulus and Nimbus nodes is perfectly adequate. But, they want a certain level of security, or they expect a certain level of security for, obviously, their Titan nodes and stuff like that. And they want to prevent bad actors. Not everybody's bad, but they want to prevent bad actors from causing any harm to the network. I can't remember everything we talked about in that last video, but I believe this is deja vu right here, Gandalf. Anyways, moving on. Since nobody wants to comment on the song. Staring down the barrel of 45. There you go. Network Picks Crypto. Shine down. All right. So are they? Just to summarize, because we already talked about the fine by the SEC on Kraken. We already talked about Coinbase and some of the concerns and stuff like that, blah, blah, blah. You know, Paxos is currently being investigated right now. Let's go actually look up Paxos investigation. Stablecoin issuer Paxos is being investigated by the New York regulator. All right, so we're going to see more of these come about as investigations get open into stablecoin providers, stablecoin offerings, APY, or any type of interest provider, or stable staking as a service providers. And we're going to see more of this, and it's going to unfortunately cause more FUD and more concern. And then the new money that wants to enter the space is going to wait until there's clear rules that these centralized entities will abide by, so that way they can ensure that they're not going to lose their money because that centralized entity did something wrong or did something they weren't supposed to. But again, those centralized entities don't know what's wrong because you aren't giving clear guidelines, right? If you go to class for the new year, your teacher that you meet gives you guidelines, right? They expect you to have XYZ. You got to have your book, your binder. You got to have a black ink pen. You got to have a red ink pen, a highlighter, tape, glue, whatever. Like it tells you. They tell you. The SEC is not doing that. The SEC is not providing clear guidelines. They're not coming out, and they're like wishy-washy, man. They need to lay it all out so that way these companies can update and make sure that they're within compliance, right? You know, like HIPAA compliance, network compliance, or network infrastructure compliance rules and regulations. There's certain things that you need to do in order to be in compliance. And they just need to know so that way they can offer services to their users, knowing full well that it's registered, it's good, the SEC is cool with it, the FTC, the CFTC, whatever C is cool with it, so they don't have to worry about getting wrecked, okay? But are the remaining crypto giants staring down the barrel of a government gun? Yes and no. Yes, because, you know, the first shots were fired. We're going to see who else gets hit, right? Who else was offering staking services that's going to get hit with a huge fine, right? What does the SEC do with the $30 million that it fined Kraken? I don't know. Anybody know? Post it in the comments. Let us know in the live chat. But I'm pretty sure the SEC is going to use it to bolster its team, right? To investigate, to be able to monitor, track, and you know, maintain this new digital world, so to speak. So that $30 million would be a nice little pocket change for them to use to do that, because I'm pretty sure their budget isn't as expansive as, say, for example, our military budget. And there's going to be other companies that might get fined, just like Paxos is being investigated by the New York regulator. And that's just in New York. Who's to say that the SEC doesn't turn around after the New York regulator's done with them and hit them with another one? But again, you got to come up with some clear regulation and guidelines. Red Pen of Mine, thank you for stopping by. Appreciate you. I do have some good news, though. I do have some good news. The RTX 4070 is expected to launch in April. Not the 4070 Ti, the 4070, right? We already have the 4070 Ti. And we're getting additional information about this. Right now, it's expected, rumor, to have 5,888 CUDA cores. Its base clock of 1920 megahertz, boost clock of 2475. It has a F2 or floating point 32 compute of 29 teraflops. It has 12 gigabytes of GDDR6X, which is important, guys, because if you've been paying attention, I actually did a video the other day about Hogwarts Legacy using Steve from Hardware Unbox's data. It seems like in today's modern games, they're using more and more VRAM. And so, you know, back in the day when a lot of the tech tubers used to advise, you know, having a card with 8 gigabytes of memory was good enough because you're future-proofing your system for games in the future. Now AAA titles are using more and more VMEM. And so 12 gigabytes is the minimum now. And that's sad, but that's where we're at. So Hogwarts Legacy, really interesting game. My wife loves Hogwarts or Harry Potter. She will be playing that game. I have the system, and the perfect card to do it, in my opinion, is the 7900 XTX. Even though some other articles and platforms have the XTX losing. Now, if you are wanting to play with ray tracing on, obviously the 4090 is the best card. But without ray tracing on, the 7900 XTX takes a huge lead at 1080p, 1440p, and it's only at 4K that it loses to the 4090 by a little bit. And that's on ultra quality presets. So I have a GPU with 24 gigabytes of memory, plenty of memory to run the system or run the game, and it can handle it in various resolutions on higher quality details. So I'm very interested, and I'm happy, and I hope that the 4070 does really come with 12 gigabytes of memory, because what's concerning is you can see here on the 4070 Ti, it only came with what? Well, it came with 12 gigabytes. What am I thinking of? What was the 3070? 3070 RTX 3070. I think that's what I'm thinking of. I think it came, 3070 came with 8 gigs. Yeah. That's what I was thinking of. So 12 gigabytes of memory seems to be the new minimum for higher end AAA titles as demand or these games become more intensive and require more VRAM or GPU memory. Nvidia RTX 40 series to see a limited supply, right? So that means there's going to be limited supply this upcoming quarter or this quarter. Wait, is it this quarter or next quarter? It's reported that the Nvidia 40 series, which includes the 4090, 4080, 4070 Ti, will face short supply through the remainder of this quarter. So it's Q1 2023. There's no reason to explain behind the shortages, but one can say that they might be due to limited production of these cards through the Chinese New Year. Obviously, the Chinese New Year happened. People aren't working. You're not producing as much GPU. So there's going to be limited supply through Q1 2023. But the 4080 price cut might be happening. Excited to see that. Hopefully the 4080 can actually get cut down to a price that makes it fucking reasonable. Because it's absolutely stupid as far as price to performance. Additionally, Nvidia added RTX video super resolution in Chrome. I don't know if you guys care about that. But Nvidia upscaling technologies will soon enter a new dimension. Online video streaming will soon be improved with the power of RTX graphics. The company announced the RTX video super resolution will unlock up to 4K AI. Everybody loves AI. AI is the new hot word. Chat GPT, AI this, AI token that, AI token that. Shut the fuck up. Upscaling will be in Chrome and Edge internet browsers. So Chromium browsers, which Edge is built on, will be able to support this new video super resolution. Network Bits, going back to staring down the barrel, says not staring down the barrel if they donate to politicians, right? Which is how I feel like Gary Gensler and SBF were, something was going on. There was a relationship there, right? There's a relationship there. And for people that didn't have a relationship with the SEC or Gary Gensler, or again, greasing the wheels for the politicians, seem to be targeted right now. They seem to be the target, and that kind of sucks. Anyways, guys, we got about 4 minutes left. Is Red Panda Money going live, by the way? Let's go find out. Let's go to YouTube. Red Mining's going on at 1. I don't see anybody going live at the moment. Red Panda Mining may not be going live today, but I hope you're having a wonderful time with your family. We'll see how things pan out. And that's going to be it for today's show. I'm going to answer some questions, get ready to wrap up, and get my day started. I got a couple calls to make, a couple things to do, and I am looking for vendors, hardware vendors, tech vendors, GPUs, CPUs, motherboards, power supplies, to work with the channel in some form of sponsorship. If you're interested in that, you know how to find me. Contact at. You figure out the rest. It's on the webpage or on the channel. Paul D. and Red Panda, test the 4060 Ti for me. I have 3 spots in a rig left I need to fill. It's like a hole in where a soul should be. So you're waiting on the 4060 Ti, huh? Well, the 4060 Ti doesn't have a lot of specs out yet, but if they really are locking down this memory bus, I'm not going to find it very attractive, Paul. But if we do get our hands on it, I'm sure Red Panda Mining will be more than happy to provide that information. And yes, Red Panda Mining, 192-bit bus. These are how these manufacturers, remember that Nvidia's copying AMD, I talked about this, and using the memory bus limitation to kind of limit the mining performance, right? Because the LHR lock didn't really work out in their favor too much. So they can lock it down through other means, through hardware, by limiting the memory bus and the speeds and obviously the memory clocks. Gandalf Gray, what do you think about... well, Gandalf Gray, I am not familiar with that term. Oh, the NFT collection. Yeah. I think it's awesome. I think it's awesome to see, you know, NFTs on Bitcoin. Bitcoin non-fungible tokens. Like that's awesome, right? A decentralized ecosystem getting NFTs and additional functionality added to it is great, right? Or it looks like the protocol utilizes Taproot, which we talked about the upgrade, or I posted about it on Twitter. So yeah, no, I'm 100% excited about it. It's good to see. I believe it would add additional interest into the Bitcoin ecosystem, ecosystem that's decentralized, permissionless. You know, like, this is great. Because you know, when projects develop on Ethereum, there's a few hurdles they have to battle, right? With the network fees, especially if there's increase in excitement for a project, which we've seen multiple times on Ethereum. And if there was one right now, it would still increase the fees on Ethereum. But no, I'm very excited. Obviously, you know, 2D art doesn't really tickle my fancy, but I think it's great. And there's a lot of people that like this shit. So cool. I'm really excited for it. So real quick, I want to say thank you to all the members of the channel, and I do want to state that one of the members has an opportunity to get some Bitcoin. I already picked a member. It's posted on the channel if you haven't checked it out. RC Hobbies, congratulations. Hit me up. DM me in Discord. Find me on Twitter. DM me on Twitter, whatever. RC Hobbies, obviously, I know who you are, and I can see your information. But you are the winner of some Bitcoin. Hit me up, and I will send you some Bitcoin. But thank you for being a member of the channel. MC, G, High Speed Miner, T-Dub, Golden Wolf, RC Hobbies, and GP Risers. I know I lost a lot of members because of the current economic situation. I completely understand. It's all good. But thank you guys for hanging in there and being a member of the channel. I wish you all the best. Red Panda Mining doesn't love me anymore. He left. So it is all good. So, oh, Discord is still going. Let's see here. Anybody sending me anything? Message requests? Yo, join our trade room. Get out of here. All right, guys. I'm going to get out of here. Might go play some WoW for a little bit. I got to grind some rep and get some stuff to make my belt. I would like to hang out with Chump Change. If you guys catch up with Chump Change or the Misfit crew, let them know that Vega would like to hang out with them. But the only reason why I never do is because the only time that I can stream on Saturday is during the morning when my wife is at work. Got to be respectful to her. Happy wife, happy life. But let Chump Change and the Misfit Mining team know that I would like to join them again one day. It looks like Rabbit Mining is going live at 1 p.m. And yeah, that's pretty much it. I'll catch you guys later on. Thank you, Network Bits. $5. Thanks for the live stream and letting me... You're welcome, bud. Take care. Appreciate you. And you all have yourself a wonderful day. Again, this video was sponsored by Mind the ASIC. Appreciate them. Go check them out. Link is in the description. And I will leave you with additional supporters of the channel. Have a great day.
Introducing the Octominer OctoTank 12 Home Immersion Cooling System, the future of cryptocurrency mining and home heating. Quiet, cool, and efficient. The OctoTank 12 allows you to overclock your ASIC miners up to 70% to get more performance for your money. Compatible with up to 2 ASICs. Fully plug-and-play system. The immersion system ensures that your miners stay cool. Perfect for garage or basement heating. Up to 150 square meters of heating capacity. Clean and minimalist design. Fully weatherproof. Designed to last for years. Save money while keeping your home warm and cozy this winter. Order yours now